Good evening, this is Rodney with the Triton Wave Market Outlook for Monday, September 19th, 2016. And this is brought to you by Triton Wave Consulting. Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. Disclaimer notice for you. All right, let's start the evening off by looking at the E-mini S&P futures. It is right now 2 minutes past midnight Central Time on Sunday evening, Monday morning, and I wanted to show you what the ES looks like. Don't pay attention too much to the waves right here because they're long-term waves, except for the fact that you can see that it started going below zero last year at the end of September, and have made a little bit of progress, but over the big picture going back to 1998, not that much progress since this went down below zero. We're ahead by about 80 points, which is not that much for a whole year. But what I did want to show you was, if we just, without the waves, if we just blow this up and just look at the cash position or the future position, the last time this is the well, let me see, that's the 21. The last time the 21, which is the yellow, and the red, which is the 55 exponential moving average, crossed to the upside was way back in March of 2016, March 9th. It looks like, because of the action last a week ago Friday, when the market dropped, I don't remember, like 400 points, and the S&Ps were down 50 handles, 51 handles, that all week long we've kind of gone sideways. And like this position right here, it's starting to set up for a crossover to the downside. Before it does that, it's going to have to work its way sideways for a couple days. But when this crosses, it'll be the first time this year, or since the beginning of the year, that it has crossed. And I'm looking for downside momentum. I'm looking for this candle to hold everything. Now, we can take this, do a little bit of analysis on this, and take the high that happened on September 8th down to the low, which happened on September 12th, and do a Fibonacci retracement on that. And we find that the 50% line right in here is at 21.44, and the 55 EMA is at 46.27. So it's only a 2-point differential. So I'm looking, the market's right now up seven handles on some news that came out of Asia. I'm not really sure. Maybe the strength of the yen. So this may go up and hit that, or it may even go up to the 21, which is about let me see, about 10 handles further from here. This will continue to project down. So if it goes sideways to up or spikes up, this is a good, I believe this is a good entry point for the downside. Now, let me show you on a lower time frame chart why that is substantiated. Hang on one second. So here we have a 144-minute chart, and this has been going down. This is the first wave down here on the Triton waves has been going down since August 3rd. So this is like a whole month and 2 weeks. And it did go up a little bit, but this is a bigger picture because it's 144 minutes. And it's gone sideways to up slightly. And then when the second wave came in, right in here, you had about 3 hash marks at, let me see what time this was. Well, you had all this time to get in, but you also, when these started going down, well, actually you can't see it on that. You can see it on the 55. Let me see if I have a 55 in here. Da-dun, da-dun. Here's a 55 right here. On the I just want to show you the number of days that are involved here. Let me get rid of that and get rid of these red lines over here, which are the session breaks, so we can see it more clearly. Okay, so right here is a very clear indication, and we can even add another wave here, and that shows you that it was that you could have caught that on that huge Friday down. And if we even go another wave deeper or another wave more shallow, right after the opening, when it popped down, you basically had, actually that was 5 o'clock in the morning. You would have to be a night crawler to get that. But the idea is that yes, these are going down and they're popping back up, but look and see what happened. This is what I call the Triton minor wave, and this one is a Triton major wave, and they hold. They ride that like a rail. Look at how that's riding the minor wave all the way up, and that's from March of 16. Comes down and hits the major wave, comes above it, zigzags up and down, catches this below. That was Brexit, and then pops back up again. But this is the first breach since Brexit. So, and we've come down, come back up to the major wave, and just gone zigzagging back and forth. Now, one of the things I observed on Friday, triple witching, was in the majority of cases, that's either sideways to up, because there are a lot of people who are caught short, and they catch a bit of the market makers try to initiate bids in the market so they can catch all the premiums on their puts and calls. That did not happen on Friday for triple witching, which is really, really surprising. They do it on the S&Ps, they do it on the SPYs, they do it on the SPXs, and all the major stocks in the market that have heavy trading. That did not happen on Friday. All we did was come back up to this area, and since the opening of trade on Sunday, which is, let me see, 1700 right here, it's military time, we popped up here and have gone sideways. So this is holding. This held on Friday, and this is holding, on Thursday, came down a little bit, and it's doing the same thing here. So on the 144 minute, hang on one second. On the 144 minute chart, you can see that it's been below zero on the first wave since the beginning of August, down below zero since the end of August, and now with that move a week ago Friday, this is actually in neutral territory, and these major waves are heading down toward zero. But what I wanted to point out was that when it came down, it bounced almost, and let me make this a little bit bigger so you can see, it bounced almost exactly 3 times, how many times? This is a 144 minutes, so 1, 2, 3, 4, 5 times it bounced off that major Triton wave, and then exactly into the 55 EMA, and it's been going sideways, sideways, sideways. So this really, now that I'm looking at it, is a that's a bear flag. Okay, that's the pole. This is the flag. If it breaks substantially above this, well, I already think it might go up a few handles because it's going into the 50% retracement, but that may be a fake out, and then up and then down. You know, like up into this area, and then down like this. And for you traders out there, this is a one-day move from this not price break, session break. Session break here ended on Friday, so this entire chart is the Friday move. But you can see, like, these are all when the first wave goes above zero, below zero, above zero. These are all like 2 or 3 point moves, nice and easy. You know, like 1 or 2, 3 contracts, make a couple points, you get out, you don't ask any questions, and you could have done very nicely on a day like Friday. All right, let's look at the bonds. All right, we're looking at the ZB space pound F 30-year bonds on eSignal. So this is a continuous contract. And you can see that it's been riding the minor wave for the last, since 9/14. So this is 9/19/16. So from 2 years from this hash mark, it's been riding this wave. Now, what I'm looking at is this first wave is coming down right here. And we can even get into a short, let me see what the shorter one. If you look at the shorter wave I just plugged in there, this has actually gone down for the first time since February 2nd of this year. So see that right there? Okay, so and what I was looking for was a crossover of the 21 and the 55. Let's just blow this up a little bit. 21 and 55 happened simultaneously with this hitting. Big time coming down. It was down, I think, 2.5 points that day. All right. We'll look at the shorter time frame to see whether it's going to come back up and hit the 21. If it does, I'm leaning toward this coming down and testing 161 as we speak, and it's right now 165.25. So let's go look at a shorter time frame chart. And we look at the 144, and the 144 has come down and hit the major Triton wave, come down below it, and all these waves are now below zero. This was a nice catch right here from 166 up to 176. That was a 10-point move when it came down below zero, and conservatively, when it's completely below zero, this is a move even down to the major Triton wave from 171.24 to 166.27. Right now, it looks like it's just going sideways. Can't make up its mind because everybody's plugged into what Yellen is going to do with the rates, and I don't think she's going to do anything before the elections. I may be wrong, but this, as long as the 21 stays below the 55, and they're both below both the minor Triton wave and the major Triton wave, then this is not, then any rallies or short covering to the upside is shortable. So I brought up a chart of the 1597 volume chart for the 30-year bonds, and all these are, I just wanted to show you where the price breaks were. So this actually goes back to August 4th. I'm going to get rid of the session breaks there. Okay, so you can see that that the major is above the minor continuously for the past since 8/26 till today. Now we're right now up 3 ticks on the bonds, and again, it's just after midnight on the 16th, on the 19th. So you can see how this was the big break last week, and it came down when the wave went above zero. You're basically in neutral territory because this is completely below zero, and this has been below zero since 8/26. So the way to play these is you wait until it goes below, you catch this, I give you a signal to get in here, to downside, confirm downside, and then this becomes a neutral territory. You can choose to stay or leave as long as this is below zero. There's another signal that comes in here. Everything that uses the last longer wave down here as an anchor. And then when you get up here, it's neutral. Come down here, you're in here. Now this looks like it's just wants to go up just a little bit, and it may catch 167.09, but that would be a good time. We'll look at it again, and actually 167. What did I say? 167.09 on a 144 puts you right here on the major wave on the 144 minute chart, puts you right up here, and this now becomes resistance to a falling bond market. So this may be the play that we're looking for. And again, let me just show you here this line of bottoms on the first wave right here, and a line of tops. So it's not just what the price action of the bond is doing, but it's the wave action of the Triton waves in their amplitude, whether they're getting narrower and waiting for a push to the high side. Now these can go, obviously these can go up above and below zero many times, even with this down, or in the case of if it were up. So there are several plays in here. So this may come down immediately or push up and try to make one last gas. But I believe this is going down. Again, this is Triton Wave Consulting, and we specialize in bonds and ES for private clients. If you would like to get in touch with me, I am Rodney at TritonWaveGuy.com, and you can also follow me on LinkedIn or Twitter. And the earlier versions of these waves were called the ABC waves. You can get in touch with Simpler Options. They're the vendors for these that have been used all over the world for the last 8 years. Call them here at this number. They've been programmed for TradeStation, eSignal, Sierra Charts, and Ninja Trader. I'm going to leave this blurb up for a second. You can pause it and get an idea of what we're doing at Triton Wave Consulting. Have a great evening and good trading, and I'll see you at the next update.